May profits be upon you. Welcome back to my YouTube channel and welcome back to another edition of the Weekly Outlook, where we examine the individual currencies from a futures perspective so that we can make better informed decisions as to the individual pairs and how to trade them for the week ahead. All right. First thing I want to do is give a couple of shout outs. All right. Who am I shouting out to? Shouting out to Pearly. Appreciate your support and your consistent support by that measure. Shout out to Trader Boy for following along and hanging in there. All right. Trader Boy X or Trader X Boy. Yeah, there you go. Trader X Boy. I'm sorry. And special shout out to my guys at the community at Lions Den Effects. Hey man, I think this is going to be a very nice week ahead. I shared some pretty good trading this week for a profitable week, and I'm hoping that you all shared in the profitability. All right, and for those that are in the free Telegram, more blue and notorious and my man Eddie. Special shout out to you guys for throwing in some really nice charts and keeping the vibe going there. Okay, I really appreciate that kind of stuff, man. That makes it makes my efforts seem worth it, and it makes engagement attractive in the free Telegram. So I really appreciate you guys posting there. And I'd like to see more of you there. If you're viewing this for the first time, I'm hoping that you're going to learn something and you'll find value in it. And you'll smash that like button. All right. And subscribe. And do leave a comment. I like to hear feedback. All right. I'm getting closer to doing live sessions here with the community here. So stay tuned for that. All right. Now, let's get into this. RT Money Meter, new updates. The RT Money Meter tracks the rate of change in individual currencies over a 15-week period. All right, we can see there was a change in the rankings from 1 to 8. USD is number 1 still from last week. CAD is number 2 still from last week. Euro has moved up to number 3. The Swiss franc has moved up to number 4. The Aussie dollar has dropped to number 5. New Zealand dollar has dropped to number 6. And pound and yen round out the 7 and 8 as they did last week. All right. Now, what I want you to take a look at, though, is the numbers. Who's trending in which direction and what does it mean? US dollar has gotten a little weaker from 765 last week to 590 this week. The CAD is going in the wrong directions. The numbers have gone from from neutral to neutral bearish, but more so bearish. All right, minus 217. It's in the red color. All right, the CAD. Watch out for this CAD. All right, the Aussie dollar has gone. The euro has gone from last week minus 662 to minus 326. It is trending up. This is a risk currency, folks. The one under it at number 4 position is the Swiss franc. It is a risk currency. It's gone from minus 628 last week to minus 481. All right, it is trending up. 2 risk currencies trending up this week. Isn't that interesting? All right, while the commodity currency is trending down. Very interesting. So we have the Aussie dollar, New Zealand dollar, both of these trending in the wrong direction, going to minus 588 and minus 827 respectively, and that's not good. And the pound is it's in number 7, but it is gone from minus 816 last week to minus 747 this week. It is trying to tick up. That's very interesting too. Now we also seen that pound had an interest rate decision, and they are conservative with their rate hikes All right, they're taking a very conservative approach. All right, and the yen, Bank of Japan is keeping this weak. They had a chance to hike the interest rate. They did not. All right, opted not to do so, standing pat with a weak yen. All right, at minus 14.48 this week. All right, a minor move, minor tick up from tick down, excuse me, for minus 13.98 last week. That's the roundup of the RT money meter. Very interesting situations. Let's take a look at the US dollar. We're always going to start out with the US dollar. Now, if I'm just looking at this in an isolated kind of way, I would think, oh yeah, this is bearish, and I'm looking for shorts. I'm looking for shorts from here. Let's not be too quick with that. Context means everything in this business, folks. Context. All right, yeah, we have a bearish situation here where price broke structure to the downside. However, excuse me, how long have we been bullish? This is in a bullish context. If you go to the higher time frames, like the daily, you'll see that this is a very bullish leg, and we broke structure to the upside here. All right, and not to mention on the 4 hour, let's go back to the 4 hour. We're not going to spend a whole lot of time on that. Not to mention that we broke structure here, broke that high. All right, the high from the 13th of May. All right, we've gone down. We went down, made a higher low down here, and then made a higher high. Could this bearish configuration here, this bearish candlestick formation here, not be maybe it's to facilitate a higher low? Do you understand? Because we understand that the higher time frames give the lower time frames the framework with which to work within. All right, if the higher time frames has made a higher high, higher low, higher high, what would be the next expectational structural point? That would be a higher low. Don't be silly. Come on. So we could be waiting for that. We have an expectation for a higher low. Now that higher low could come all the way down here. All right. I like this section here. I like this section here. I like these here. All right. It could come all the way down to here. We could break that low. All right. But understand something. The bigger picture is, if we put the fibs on from the swing low to the swing high up here, we can see that this trading range, the bottom of the trading range to the top of this trading range, where we've come past the 50% mark here. All right. And this is premium price. This is discount price. You've seen me go through this in my previous videos. If you haven't, go check them out, will you please? I always repeat this stuff, but this is where this area is where we want to take longs from, not up here. We want to take longs from under the 50% equilibrium of the trading range. Here at the golden ratio, the 705, 786, these are the best prices. Okay. But if it doesn't come any further, it has completed a 50% or over a 50% pullback. Excuse me. So I'm not going to go nuts looking for price to take out this low. Now, that low is significant to me. All right. One of the things I like to see first before I start looking for longs is the failure of supply. Okay. We've seen the failure of supply already. All right. And we had supply zones down here. All right. We had supply zones down here. Price passed through it. All right. And what do we look for? We look for price to pass through it and come back to the reaction point. All right. Where it reacted to price. And we tag on it and we take longs from there. All right, wait for it to pull back, and we take longs from there. It's like a break, looking for a break instruction. All right. Now, if price, which has formed a demand zone here, let's see, boom. The price comes down here, trickles down here, and gives a close below that low, especially if it breaks below this low, because this is the zone it reacted to already. If it breaks that low with a close, then I will start looking at this as a reversal. All right. Right now, we're getting in a reaction after breaking a high. I'm looking for a price to pull back to the origin. All right. I'm already looking for that. All right. And as long as we don't break this low, we are still bullish. And as far as this trading range goes, the one I just went over, all right, the swing high to swing low. So I'm still bullish. Okay. We might get some bearish price action from here, but as long as it doesn't start breaking demand zones, I'm still looking for bullish setups and trading with bullish strength in the US dollar. Do you understand? Until I see demand giving way to supply, demand is in control. This is a bullish price action. This is a bullish trend on the higher time frames. So that's what I'm going with. All right. If it comes down lower, I'm still looking for price to come back, a return to origin after breaking structure to the upside. It can come all the way down here. This is an unmitigated zone here. All right. It could turn here. All right. We have an unmitigated area within that demand zone. So it could come down and touch this. That'll be fine. This is where I'll be looking for bullish price action so I can take longs with US dollar. But until it breaks the trading range low, I'm still bullish. I start seeing some demand getting broken. Hey, I make my adjustments. All right. I make my adjustments. I wait for price to come back up to the last demand area, last supply area before it broke this demand, or before it broke this demand. I'm looking for that area of supply, and then I'll take a high probability trade from there. I hope you understand what I just went down with. All right, let's move on to the next one. All right, we're going to Canadian dollar. All right, why do I have that there? I have the slides idea, but we're looking on the 4 hour. All right, and what do we see? We see price is bearish. All right, and it became bearish right up here. Okay, so I am looking for again more bearishness. We broke a significant zone of demand here. We ran through it. I mean, there's no mistaking that price came back, retesting, and then fell more after this corrective formation there, the corrective structure there. We broke down even more. All right, this is where I'm looking. I'm looking for more bearishness in this. If I can get it. Did I get it right? Yeah. Okay. We have relative equal lows there. And you know what? You know how I look at relative equal lows. That's a draw on price. More than oftentimes, price will come back and take that out. Period. If I can just get that, that's not a stop loss. If I could just get this right, where is my? There it is. Oh gosh. All right. So that's what I'm looking at. I'm a little troubled right now. Excuse me. All right. So that's what I'm looking at. All right. So if price could, you see this reaction here, that's an interesting reaction. Now, prices come to the extreme of this 4 hour demand. All right. Almost came through it, but you got to know that the next time price comes through this, it's going to take it out. You have to know that. All right. Chances are we're going to take that low. All right. So any price action that pulls back up, I'm looking as an opportunity to take a short. All right. I'm looking for maybe a bear flag to form, and then we can take that short and take out these relative equal lows. Okay. So, we're looking at futures. So I'm not talking about trade setups here. All right. I'm not trading futures. We're trying to establish what the bias might be. I'm looking for weakness to continue in the CAD. All right. Until we start breaking supply, like, let me get you this zone here. Okay. Until we start breaking zones of supply, I'm still looking for demand to continue to fail. All right, we're broken structure here. So with a break of structure, I can reasonably expect price to return to impulse. There was on the lower time frames, there is a demand zone here. So I would be looking for the flip here. All right. The flip to continue down. All right. A little more action up here, and somewhere around this area here, we can see a turnaround. Okay. That's just for the bias. All right. And again, CAD is the one that is getting weaker. All right. And there's a reason for that. I'm looking for some more of that to continue. Let's look at the what is this? The Aussie dollar. Oops. Writing on. All right. So we can see we're in a bearish market. All right. Making lower lows and lower highs. Here's the swing low here. All right. Swing high here. Did we take that high out? It looked like we came close to it. Yeah, look at that. We did take that high. All right, but what did we do? All we did was take the liquidity from up here, right? We didn't. The price is not showing that it wants to go higher with a close below this. You understand? I mean, above that. All right, this is demand here. All right, I'm looking for demand to give way to supply. I'm sorry. This is supply. God, dog, what is going on with me? I need coffee. All right. This is supply here. And I'm looking for price to violate this supply with a close above a demonstrative bullish candle that'll let me know price wants to continue up higher. That's not what happened here. Took the liquidity, price dropped from here. All right. And I believe this drop will continue. You see how we pushed up here? I think this is just to facilitate a lower high to be established. All right. We came close. And this is why I follow these things. All right. We came close up here. I'm thinking this may be an incentive. All right. Because this is a weak attempt to make a higher high. All right. And we didn't come in contact with this zone of supply. So I'm going to be looking here. Come on, man. What is that? All right. I'm looking here for price to finish filling in the fair value gap. All right. This would act as inducement to get traders to take shorts early. All right. And maybe to facilitate a mitigation of this 4-hour zone of supply. So what's interesting to me, though, is there was a demand zone here. There was a demand zone. How do I know? How do you validate demand zones? Because it broke a high. It broke high. It took out liquidity. Did it sweep when it was made? Was there a sweep when the zone was made? Yes. See that? Stop it. You see this here? That candle swept these. All right. So I like that. I like to see that. You can draw it this way if you want to. I'm always in the nitty gritty of it. Sorry. What did I just do? All right. Yeah, I'm always in the nitty gritty. The wick demand here. All right. Because that's the extreme of the zone. But you can put it here if you'd like. But I'm looking for price to come here in this area. The possibility that price may pull back, giving us an opportunity to take shorts. All right. Maybe we come here on the lower time frames. Maybe we come here so I can take a high probability short. Now, if I don't get the bearish price action here, listen to me closely. If I don't get the bearish price action here, because I see a buy to sell, I see buy to sell wicks in this area. And this would be the extreme of the reaction to this demand. I know it's kind of hard to follow, but if you check out my videos, you understand I always look for demand to supply flips or the vice versa from supply to demand. All right, I'm looking at this as an opportunity. And if we get that opportunity in this area, I would be looking at a right shoulder, a possible right shoulder here. And we can continue down. That's one scenario. If I don't get the bearish price action here, I'm not doing anything, of course. If it breaks through that, I'm looking for that other scenario where we might get that mitigation here. And then I could take a very high probability trade to the downside. All right. One of the reasons why I like that scenario best is because of the pricing. Come on, what are we doing here? God, I always get lost in this mess. All right. One of the reasons why I like that scenario, because if you go swing high to swing low, you can see that would put us above the 50%. We're at 50%. Price could continue down from here. No doubt about it. All right. But we're at 50% in this zone, where that'll put us above 50%, filling in a fair value gap, an imbalance, and mitigating a zone here right at the golden ratio. I would love to see this scenario here. So I'm going to keep my eye on that. All right. But I'm also going to keep my eye on this zone here. If I don't like to leave these things. All right. I'm also going to keep my eye on this little scenario here, because I think there's potential to take us a flip here. All right. This looks like it might be an interesting opportunity. Okay. I'm reading this: a lower low, a pushback, a pull up high, a swing high, a lower low, and we break that high. Boom, a return. Did we get this return to impulse yet? No. That might happen right here. All right. This is the return to impulse. And we might get that reaction to take it up. All right. So look out for that. Can you understand what I'm saying? This is my classic setup. I'm looking for it. We've come down, we returned. Yeah, we did. I gotta keep your mind on this. Now we can come down and take that out, come down to the actual origin. I know I'm giving you too many scenarios to think about, but these are the things I think about, and I'm just going to share them with you. All right. It's set up relative equal lows there for a scenario where price may want to come by and take out those relative equal lows. All right. Respect that low and then come up. It could happen. It could happen. So just keep those things in mind. All right. If we get bullish price action here, if price comes down bearishly, fills in that wick, takes out the bottom, mitigates the extreme of this zone, we could see price come up here, and that would be a colossal buy to sell scenario. Can you dig it? All right. We'll keep an eye on this one for bearish price action. We'll keep an eye on this one definitely for bearish price action, and we'll keep definitely first eye on this. We don't know which way this is going to go when it opens. If it comes down here, we'll know what to do. If this, then that, right? That's how I work. Let's look at the New Zealand dollar. New Zealand dollar. All right, this is one of the ones that was getting weak. All right, move down two rankings. Right. What do we have here? Same thing as Aussie dollar. We had a lower low. Just keep the context of the higher time frames in mind. Very bearish market, right? So we made a lower low. Made this low. We have a pullback. We took out the liquidity of that high. Very nice, and price dropped. It's exactly the same as the Aussie dollar. All right. And what do we have here? A possible flip. Now, I have this dotted line here because it looks like a key level, right? We broke it, tested it as resistance here. Broke lower, come back to it, tested it as resistance here. All right. Broke down as support here. Finally come back to it, tested as support, then break through again. Support turns into resistance. Here we are. All right. I like that level. So, you know, that's the first thing that caught my eye. I'm also looking on this level here. Look, we have demand. We have the extreme of the reaction, and then we have the breakthrough. As soon as it breaks through, especially when it breaks through like that, leaves behind the last demand before the violation of this, of the last supply before the violation of this demand. I'm already waiting there for a setup, and it came like clockwork. Here's the deal. During the last weekly outlook, I was looking here. And I mentioned I'm waiting for price to come back here. It took a while, doggone it. It took a while. I didn't know it was going to go further and make a lower low from there. I didn't know that. You know, I couldn't tell that. I didn't think it was going to take out this demand zone. This is a legitimate demand zone because it broke structure. It took liquidity on the way down to form it and then came up. I mean, it ran through that. All right. So I should have been looking here for shorts, but price turned around. All right. After it made the lower high, the lower low. And why would it make that lower low? Why? Broke structure. Lower low. What do we expect? A return to impulse. It found the decisional order block here, and this was a logical place to look for a short. That's it. That's it. Doesn't always have to come up to the origin. All right, but it came up far enough to an unmitigated zone of supply. All right, so what am I expecting further downside action from here? I am. I don't think you see this reaction to this demand zone here. See that reaction there? It's just like Aussie dollar. So we're going to look for the similar situations. Okay. If I'm going to mark this, I would mark it this way, right? I can go down to the extreme, you know, the nitty gritty. You know what I like. You already know what I like. All right. So I'm looking for price to quite possibly fill this wick, come down, mitigate further into this zone. All right. Maybe even coming down into a return to impulse down here. All right, maybe coming further down, taking out this low for liquidity, coming down and mitigating, just like the scenario we were talking about in Aussie dollar. If I can just get these markings right, and maybe we can come up. If this is a very light mitigation, all right, I can see a wick up into the zone and then coming back down. I can see that wick. All right. And using this as inducement to go higher, but we haven't even gone to the midpoint of this zone, you know. So that's why I think there's room for price. Come on, man. That's why I think there's room for price to come back up, take that high out, take this high out, and come up here, and we can take it further down. This is bearish to me, and I'm looking for more bearishness in this currency. Okay, so if I'm going to leave a mark, I would like to see if we can fill this wick, get a better price for a push up and then down. This is what I would like. I'm not saying it's going to happen, but I think there's a good chance for it to happen. All right. Is this the higher low? Is that the highest high? Is that the highest it's going to pull back? Right to the 50% mark? Can we get higher? Can we go closer to the golden ratio after a light mitigation? Yeah, you know, we're going to see. We're going to see. Okay, let's move to the next one. Swiss franc. Swiss franc. This one really interests me. Why? First of all, let's look at the RT money meter. All right. Swiss franc is actually going from minus 628 to minus 481. This is a risk currency that got a little bit stronger, trying to pull out of the negative zone. All right. The reason why I find it interesting is because look how hard it came down, right, to make the lower low, breaking this structure here. All right. And if we look on the higher time frames, if we go to, I think it's a weekly. Actually, it wasn't a weekly. We can go to the daily, but now that we're on the weekly, let me see this here. Let's get rid of that so we can see clearly. Okay. You can see this was strong, a strong supply, strong demand. It's the wrong color though. All right. And you can see that price broke through that demand. What does that usually mean? I'm looking for shorts. I'm looking for short setups. I don't care how high it pulls back, because after every break of structure, which was this, that's exactly what this was. After every break of structure, you return to impulse, right? You're looking for a pullback of some kind, and we are in correction right now. Okay. So we violated this zone. I'm looking for short setups. I'm looking for weakness in the Swiss franc. Despite the fact that we had a pullback that didn't make a new low yet, we're still in correction until we break the swing high. Until we break the swing high, I'm still short on this. This is the top of the trading range, the bottom of the trading range. We put a fib on this. We had a 50% pullback. All right. I think this pullback comes maybe to test the breakout point of this consolidation. Maybe we come back and test here and then continue down. This is a risk asset, folks. All right. So we got to keep the fundamentals in place. We got to keep them in mind. What is the Swiss bank doing? All right. What are they doing with the interest rate? Everybody know, just keep abreast of what the news is. All right. Is the Swiss going to strengthen? Is the Swiss going to find strength and start climbing up? Or are we pulling back for a higher low to make a lower low? I mean, a lower high to make a lower low. This looks corrective to me, and I think we may pull up a little bit more and then start coming down. Let's look on the 4 hour. Get rid of that. And we can see this price action. The most recent price actions got this bullish surge, right? But did we make a new high? No, but we did leave some relative equal highs up here, right? Price could very well, we had a sweep. Look at this. We had a sweep here. Had a sweep. So that is interesting to me. We had a sweep and then we had a fall. Do I expect price to continue higher? Well, I'm going to tell you something. I'm looking for supply to fail first, right? And we saw supply fail here. We saw it. You can't deny it. It happened. All right. Not to mention down here in this area here. I mean, this, if we go into correction, I'm looking for a correction down to about here. And then price turning around. I don't know why that thing just did that. I'm looking for this. Price, look, price broke through, and I'm looking for a return here for price to quite possibly give us bullish price action here and maybe continue up to take out these highs. Do I see price coming all the way back down? I don't know about that. I think it's we'll look here for the bullish price action first. Okay. If the price even makes it down here, we got to make it down here first. We're on a 4 hour. Okay. And we've broken supply. We're passed through supply. I'm looking for a pullback and then a continuation of this bullish surge. Yeah, we have a fair value of an imbalance to fulfill. We have an incentive for price to come on down and take out these relative equal lows. So this looks like a scenario that makes sense. We'll fill in that this wick, take out the relative equal lows, mitigate this sell to buy demand zone here after this break of supply here. All right, could get a little flippy, here. So that's what I'm looking at that. All right, let's move on. Go to the euro. Euro is exactly the opposite of the Dixie, the inverse, and that's what you should be looking at. Look at all this price action here. All right, we know this is a bearish market. It's been bearish, right? We had a nice little push up, and we broke structure here. We stayed up here, went sideways, and then on this key level, which was resistance here, we broke through resistance and stood for support for a good long while, from the 23rd of May to the 9th of June, right? Until it gave way. And here we are testing that area as resistance, support turn resistance, right? All right. So, but in the meanwhile, I'm marking that we broke this supply zone. All right. Came down to demand. I thought we was going to break the demand zone, and then we can come up and look for short setups to take it lower. That's what I was looking for. All right. Demand actually held here. Yeah, we have wicks below, but we don't have closes, strong closes that demonstrate that price wants to go lower. We don't have those strong closes here. So, in my estimation, demand held, broke structure to the upside, breaking weak zones of supply along the way. But this was a shown up zone, and we broke that zone of supply. There is an argument to say that price may continue higher, but context, people, context. This is a very bearish market. Okay, you can see the lower lows and lower highs here. All right, could we have just facilitated a higher low to make a lower low? I mean, a lower low to make a lower high. I'm thinking that is closer to the truth. All right. I'm going to be looking out for either direction, just like with the Dixie. All right. I'm looking for bullish setups here. I'm looking for the possibility of bullish setups here, because we did break supply. But this is very important. There was a demand here that price broke through. All right. Turned around here. I'm looking for shorts, man. I'm looking for shorts. This is a minor zone of supply. All right. This was a minor zone of supply. Very minor. All right. But this demand That was legit. That was legit. All right. We had it formed with sweeping the lows, broke structure to the upside, broke above that key level. This was a legitimate zone of demand. We broke through it. As price comes back up here, I'm looking for short setups, and that's it. If price comes back up here, I'm looking for it. I'm looking at it as corrective. All right, and we may come back right here for supply to come on down. We could actually start coming down from here. All right, so I'm not going to be. I'm looking for shorts in this overall higher time frame bearish market. This market is trending down. All right, and although we didn't get a close below this, we definitely got a close below this one. All right, and with that pullback, I'm looking for this as shorts. I'm looking for opportunities to take shorts. I'm not looking for long positions right now, because that would be counter trend. Those are lower probabilities. On a session basis, on a day-to-day basis, intraday trade basis, yeah, I can catch a long here. Look, but I'm not going into that right now. I'm looking for shorts to hold. You understand? That's what I'm looking for. We traded below the key level here. Again, we got below that key level. I don't think, after staying above, we couldn't stay above. So when we hit here, I'm looking for this. I'm looking for that. It's that simple. Okay, so let me draw my lines on here so I can refer to it later. All right. Maybe we come up here and then further down. That's what I'm looking for. Had a nice little reaction here, but I'm looking for this to represent a lower high to make a lower low. I'm looking to attack this area here. All right, so that's my stance on that. I'm telling you right now, I know I'm going against some other people who I respect as great traders, and they're looking for bullishness in here. I am not. Anyway, let's move to the pound. I'm similarly in the pound. Look at this. Lower low, lower high. We get behind all of these corrective the corrective price action there to break those lows, right? Come back up, take out the high, take the liquidity, and then price drops just like in the AUD, Aussie dollar and the New Zealand dollar, and then we break structure to the downside. Price just melts, taking out levels of demand here, taking out levels of demand here, right? So why would I be looking for longs? All right, price does something though. Throws some people off a little bit. Oh, one time too many. Look at this price action here. Boom, boom, boom. All right, pull back low, a lower low, come back up, make relative equal highs. Okay, you know what that means. All right, we got a nice little inverted head and shoulders going on here. Price comes up, takes out those relative equal highs, and we move up. Now, what was this move? This move came up to the breakout zone, to the breakout area. All right, I'm looking at that already. It came up to that, just like I said in the very last analysis. All right, and gave us a very nice short from there. A lot of people got to enjoy that ride. Congratulations. All right, so price comes down here. All right, what are we looking at now? I got this whole zone marked. All right, I don't need to mark this whole zone because I don't like big zones like this. I like to refine those things. All right, so if I refine it, and that's not right. All right, if I refine it to the wick area, the nitty gritty, all right, this looks like incentive for price to come down and take these lows. Come on, man, why you do that? Looks like incentive for price to come down and take that low, take that that liquidity from that low, all right, and come down and mitigate the zone, all right. Do I see price reversing from here? It's possible because we did break structure to the upside, right? But I think the break of structure was for a lower high to be formed so that we can make a lower low. That's my my outlook on that. All right. If you put your Fibonacci's on this, I'm looking at the fact that this is the 50% where we hit the golden ratio for a lovely full. We hit that 705, man. The best prices. We hit the premium price above that 50. This is the place you want to take shorts. This is the place you want to take shorts. So I'm looking for price to maybe come back up, test this zone here. If it pulls up, and then we can continue down. It's not going to just run through, but we might go sideways a little bit and then, consolidate, then push down. I'm looking for more weakness in the pound as it gives way to the strength of the US dollar. That's what I'm looking for. So let me draw my lines. All right. Here's a possible spot because it's unmitigated. We can see price pull back here. Hold on. We can see price pull back here. All right. And then come down to make a lower low, as I believe this might be the lower high, or price could jump down here, then pull back. And then we could see that scenario play out. Could come down here first. Could come up first and then come down. All right, we'll see. We'll see. But I'm looking for the price action. I'm looking for bearish price action here. Right? Looking for that bearish price action here, that bearish action. Looking for that bearish action. All right. And I'm looking for the potential for bullish price action here because this is an unmitigated zone of demand. So last one. Let's go to yen. Yen, oh, this is kind of funky. Okay. If we see the 4 hour, I mean, we know this is this has been bearish for a long time, right? Got a little uptick, right? What do we got here? What happened here? Price found this double bottom here, right? Come down, take the liquidity below this low here, right? Form the lower high, and then come down, form the lower low. Guess what? We come back to retest this zone, the breakout zone, for a short. All right, excellent price action. This is the kind of price action you want to see, right? This, my dear friends, is a flip, a demand to supply flip. Yeah, I'm marking it. I'm marking it for you. Just be patient. All right. All right. And I'm going to put this here, right? Boom. Right. That is supply. We got a nice flip. This is where the money's made. I'm trying to hook you people up. All right. Let your eye go to those key levels, then look further. Is there a supply there? Is there a demand there? Do we have a flip situation? Of course we do. When demand is violated, you see a reaction pushed up and then come down. When it comes down and crashes through like that, this is prime area for a high probability trade. Price comes up, hits it, bam. All right. This is what I love to see. Now, do I expect price? This is a weekly zone of demand here. I need you to see that. All right. A weekly zone. And this is the extreme of that weekly zone. Okay. There we go. All right. This is the extreme of that weekly zone. We're at the extreme of it. Do I think we're going to take that low is the question. Do I think we're going to take that low? Price is trying its best to do so. Come on, man. What the heck just happened? All right. Price trying his best to do so. It tried to respond. This is the bullish response, and then the sellers came back in, and we closed bearishly last week. All right, big old doji, but it's a bearish looking doji, isn't it? All right, if we go to the daily, we see the push up and then the engulfment of the body. But it's, this is a bearish engulfer, but it's not the strongest looking bearish engulfer. I like to see the engulfer take the top out, or the body matches the opening close. This is the close. I like to see that open on the bearish engulfer pattern. I like to see the open of the bearish candle to be at the very least equal, and that body is not equal. But we did take out the low. That's cool, but we didn't take out the beginning of the impulse. All right, so you gotta take that with take that in consideration. Now, could we see price come back up and then finally crash through? Yeah, I'm looking for a bounce. I'm looking for a bounce, and we might see well, price did come down, push back up, came down, pushed back up, sellers came back in, pushed back up. I'm looking for this area. This might be a flip area, to be honest with you. This is on a 4 hour. This might be a flip area where price could come in here, round over. Come on. Yeah, I thought you was going to do that. Round over and then come down. All right. I'm looking to see, are we, is what do you call it? Supply? Is demand in control, or is supply in control? Who's in control? What happened here? This was demand. This whole thing was demand. And that demand was violated. Boom, right? We could see price, if it takes that high, it may come up here. I'm going to keep an eye on this. Because that might be the supply it comes to. Let me see. All right. So we might get a reaction here, and price could very well come up here as a reaction to this supply, but we're more than halfway through at this point. I believe price is going to take this low. I believe price is going to take that low. Okay. And because we've come so far down into this this demand zone. So with this reaction here, I'm looking for a little bounce for continuation. Then I'm looking for price to take that low. All right. Now, if it goes past this, I'm looking for bearish price action here. If I don't get that bearish price action here, guess what? I'll be looking up here. Got it? Easy. Now, I know we're going to get something here because this is the last support. This is the last support that held. Price came down here, pushed up, and then crashed through. Okay, so we can get it up here as well, because this wick is supply here. This wick is supply here. It could happen. It could very well happen up here. So I'll be looking here first. That's all. If this, then that. You got to have a plan. If I don't see the bearish price action here, I'll look for the bearish price action here. If I don't see the bearish price action here, I'll be looking up here. It's that simple. All right. You just got to go with your bias. What is your bias? This zone, this weekly demand seems weakened. We played around the midpoint, came through that midpoint, had a last gas reaction. Do I think there's a good chance we can break through? Yeah, I think it's a higher probability chance that price will break through as opposed to reversing from here. All right. The reverse could happen, folks. The reverse could happen. But I'm going with the price action. The current prevailing bias is bearish. Okay. And we've broken through a demand zone. I'm looking for short setups. That's all. All right. And we have a weakened bearish, a bullish order block here. So, it's weak. I think the job is going to be finished. That's it. I hope you got something out of this. It was kind of long, but I hope my walkthrough helped you to see the markets the way I do. And I think it'll help you. All right. And that's the only reason why I keep putting it out. I appreciate your feedback. If you found this helpful, do smash that like button, smack it upside the head one time for your boy. All right. And I would really appreciate that. And also do subscribe and catch my notifications for the updates. You got to hit the bell icon so that you can catch the notifications as soon as I put those updates in there. Do leave me some feedback. I want to hear from you. What are your setups? What are you looking for? Do you want me to take a look at any particular markets? Just give me some feedback, man, because I like to interact with my people. All right. I will see you in the next video. Do check out the videos I'm going to put out after this one, where I look at individual pairs, and I'm going to go through them pretty fast. There'll probably be about 3 to 7 minute videos each, and I will see you in each and every one of them.